Gold has been on the move down since last October, and it tumbled after the Federal Reserve minutes came out yesterday. The idea being that rumblings of an end in sight for QE among Fed members was not good for gold. Now, folks like Dennis Gartman, publisher of the Gartman Letter, writes that gold bugs who have operated on the thesis that the Fed has lost control of the money supply are in tatters. Other gold traders, according to Bloomberg, expect prices to bounce back as concerns mount that U.S. lawmakers are not doing enough to control budget deficits and people want to protect their wealth. One question that keeps coming up, we talk about it, is there more to the swings in the price of gold and silver than meet the eye, or are claims of market manipulation unfounded? Well, Keith Weiner is here to talk about it. He's president of the Gold Standard Institute, CEO of Monetary Metals. He's here with his views, so thanks so much for being on the show. Welcome to Capital Account.
Thanks. Good to be here, Lauren.
Great seeing sunny, beautiful LA. Wish I was there with that nice weather. Now, you're obviously a gold advocate, judging by your title and what I've read of your views. From what I understand, you advocate for some kind of a gold standard. Now, this puts you in the same camp as some folks who also happen to believe that the market for gold and silver is heavily manipulated. You disagree with them. Why?
Yes, absolutely. First, I want to say I'm coming from on the same side, a friendly side to gold. At Monetary Metals, we're about producing a yield on gold, earning money that way, earning real money. At the Gold Standard Institute, we're about promoting the use of gold as money. And so my criticism of the conspiracy theories comes from the friendly side, saying, yes, we believe in gold, but in the mainstream we have some perception issues, and I think these conspiracy theories are not necessarily helpful.
Well, what do you have that disproves them? Why do you disagree with them, discount them as conspiracy theories?
Okay, so I brought a couple of graphs. Can we put those on the screen?
Yeah, we can skip down to those. So if we could take up the graph where the gold price overlaid with the number of gold futures contracts, we have that up right now. So what do you think that this shows?
I think it's important for people to understand when so this is a graph showing the number of the open interest. It's called the number of gold contracts outstanding is the green line, and then the gold price overlaid with the yellow line. I think it's important for people to understand that when you sell, there are two different ways of selling a gold future. There is a sell to close. So if, let's say, you bought a future on speculation because you thought the price was going to rise, and then the price starts to go against you, you sell that contract, and that is going to close that contract. Chances are the other party on the other side will buy it back, and then they make a profit on that. The other way is, of course, what's alleged in the conspiracy theory, which is you could create another contract out of thin air and sell it. So what this graph is showing, if you put that back up on the screen for a moment,
yeah, sure,
is that according to the conspiracy theory, the price falls because the big banks are creating new contracts and selling them. But what we see is as the price is falling, and particularly I want to focus on the latter part of December. When I put this together, this was the most recent price drop in gold. I didn't have a chance to see the price action this week when I prepared this material. But we see that the open interest, the number of gold contracts is falling. And that suggests that it's what I call naked longs. People who speculate with leverage on gold futures are buying their contracts back, or excuse me, selling their contracts. And that's why we see the open interest declining.
Okay.
And so the conspiracy theory doesn't fit the data.
So let's look at it.
What I suggest, I'm sorry.
No, go ahead. Go ahead. Finish your thought.
What I suggest is that people think of this a different way than the conspiracy theory says, well, the banks are naked shorting it, and they present the banks as having a lame excuse, well, we are hedging our metal. It doesn't make any sense. Why would you buy the metal and hedge it? So what I suggest that people consider is that the banks aren't hedging their metal. They're arbitraging in order to make a profit. The banks are captive like everybody else to Wall Street, and they have to have a good quarterly earnings report. And so what the market is doing is it's saying, okay, to anybody out there that has credit available to them, you can buy a gold bar and simultaneously sell a future against it in order to make a profit for carrying that bar, holding that bar. And so I think it's important, and this is my second graph, to take a look at the difference between, or the spread between the futures price and the spot price, which is called the basis.
Yeah, so let's bring this up. So this shows the gold price, and it's overlaid with what you just explained is the basis, which is the spread between the price of gold futures and the price of gold metal in the spot market. So how does this show there is not manipulation going on in the market, as you contend?
So first of all, it's really interesting to note so the basis is quoted as an annualized percentage. This is what a bank can earn by buying spot gold. And any given day, you can see that green line shows the other value. And it roughly is between 0.6% and 0.65%, pretty much. Now, then that's for buying spot gold, let's say on the 18th of December 2012, and selling a December 2013 gold contract. So it's roughly 1 year. So by comparison, if the bank were to buy a 1-year Treasury security, those things yield less than 0.2%. So from the bank's perspective, it's simply much more profitable to carry gold than it is to carry a 1-year Treasury note or Treasury bill. But the other thing that graph shows is that if the banks were, so the conspiracy theory says the banks are selling futures naked. If that were true, then what, and driving the price down, as you can see from the gold line, you know, the price has been dropped over $100, certainly from September. And I think that, you know, peak to trough from mid-November to December over there is almost $100, $80, something like that. If that were true, that would push that green line down because the banks are only selling a future. They don't have, especially in silver, they don't have the silver to sell. So they're selling only the future. That would drive the price of the future right, you know, $100 down, while the spot price is still holding steady. So that green line, that spread of future price minus spot price, would fall completely off the bottom of that graph and become negative, which is called backwardation.
I was going to say, that's what's called backwardation. I know we don't have a lot of time to get into that, but you're arguing that here, what's the relevance of it? Just a simple explanation.
Well, it's just like in physics, you know, when Einstein says that gravity is going to bend light a certain way or something like that. You like to get to the point where you can then observe real data and say, well, if the theory is true, we're going to see light going to the left, and if the theory is false, we're going to see light going to the right. So we now have a situation where, if this theory was true, whenever the price dropped and the conspiracy theorists say that it's manipulation, we should see the basis completely falling off a cliff into the abyss, and we don't. So what I would suggest to viewers is on our website, monetary-metals.com, we're going to have a follow-up piece for viewers where we can present a lot more information about backwardation and go into more depth than we can in a short
Interesting.
clip
And quickly, I just have 30 seconds left, but what do you attribute the drop in gold recently to, if not to manipulation? What's your theory, if you have one? 20 seconds, too, you have here.
That's interesting, and obviously everybody enjoys having an opinion, and myself included. I think we have to resist the urge to say that every blip in the market has to have an easily point-outable reason that we can say, oh, well, that's it. Personally, I suspect that liquidity conditions are getting tighter, both in China and in Europe, and people have to liquidate assets, especially where there's a firm bid, as there is in gold and silver, versus, you know, bonds in Europe and other things where it's much harder to liquidate. So they find whatever's not nailed down and they liquidate it, and, you know, you see these sell-offs. I think going forward, it's obvious that the price of gold and silver is going to continue to rise. We shouldn't cheer that because that's really not gold going anywhere. That's the dollar going down. Yeah, because a great
and
point. Secondly, we're
going to have to end it there. We're out of time. I didn't mean to cut you off, but you got so much great insight in there. I really appreciate you being on the show. Really interesting stuff.
All righty, thank you. Take care.
You too. Let's wrap up with viewer feedback, and Dimitri is joining us for this one because what's more fun than having just me respond to viewer feedback? What's more fun is having me and Dimitri respond. So Gibson V. Log said earlier this week, I would love to see Colin Roche come into the studio for an interview with some better audio. His approach seems very interesting. This got so many likes. It got more than a dozen at least the last time I checked, which was a while ago. And we're so sorry that his audio wasn't better. But yes, he has such interesting insight, and you can always go read more of it on his blog. He has Pragmatic Capitalism. That's his blog. TW Skeptic represents what many people felt about Dimitri and my discussion about the Dairy Cliff. He or she said RT is anti-milk, The argument is because we're the only mammals who drink milk of other animals. How is that a good argument? We also eat rice and beans, grains, which can't be eaten raw and no animal eats. If you can't explain what the health issues are, then why even give an argument? There's nothing wrong with raw milk. The problem is government doesn't allow farmers to sell it. Well, thank you for your feedback. Let me draw these people off the comment cliff, because I would like to point out that there are plenty of health problems with milk. Dimitri, maybe you want to weigh in, but I was looking at the Physicians Committee for Responsible Medicine. They say prostate and breast cancers have been linked to consumption of dairy products. Contaminants from pesticides, drugs, hormones, both natural and synthetic, are found in cow milk. Type 1 diabetes is linked to consumption of dairy products. They pose risks for children. They encourage obesity.
Guys, and I should just say, I mean, look, the reality is if 60% of adults can't digest it and they end up passing gas nonstop as a result, you know there's something wrong there, right? You shouldn't be drinking it.
Yeah.
All right? And it puts you to sleep. Why? Because it coats your stomach.
Yeah. Worse than all of those health problems is the
that's absurd. That doesn't make sense. It shouldn't be.
Yes.
I'm with you there, Lauren.
Okay. Unfortunately, that's all the viewer feedback we have to get to, because we have a very important announcement. This is actually hard for me to say. I think I'm going to get emotional. This is our last Capital account. This is our last day on the show. It's been an amazing run, a little over a year and some months. Feels like a lifetime, because we've really poured so much of our heart and soul into this, and it's time to move on to new things. And I just want to thank so much all of our viewers who have been so supportive, all of our guests who have been so supportive, the ones in the beginning who gave us a chance when they didn't even know who we are, our staff for being amazing and putting up with us, our producers, our entire team. Dimitri, you've made my dreams come true. I don't know if you want to add something.
No, I mean, likewise, I've said that before, Lauren. I guess I would just say, and then I want you to continue, because the audience has known you for so long. I just say I'm very grateful. I'm very grateful to everyone, and to the audience especially. You guys have been really remarkable. It's been a real pleasure to produce something that we all enjoyed, something that I felt was missing before I came to RT and worked on this show and created a Capital account. And I feel you guys really, I thank you for coming and watching every day and showing the ability to look for something deeper, I guess.
Yeah.
A little bit.
Something deeper. And thanks so much to RT for giving us the opportunity to do the kind of show that we wanted to do, the kind of show that pushed the envelope and did some things that aren't conventional on TV, like long, in-depth interviews, which ended up being a huge hit. So I just can't thank RT enough for the opportunity to do this. And lest we drag on and droll on about this, we are going to say goodbye for good, because that is our show for today. Thank you so much for watching. Be sure to keep looking for ways
we'll be around. You'll find us.
to get
Twitter.
this information. You know you can follow us both on Twitter at Lauren Lyster and Dimitri at Covering Delta. Go like our Facebook page one last time, facebook.com/Capital account. We'll have a message there. In perpetuity, you can watch our videos at youtube.com/Capital account and hulu.com/Capital-account. From everyone here at Capital Account, thank you so much for watching, and have a great night.